Welcome to Deloitte's Debrief Tax Webcast series in Asia Pacific. Our webcast today is from our transfer pricing series and is titled Transfer Pricing Dispute Resolution, a Focus on China. My name is Dolly Zhang and I am a tax partner based in Deloitte, China. I have the pleasure to hosting today's webcast. I have two speakers with me today, Victor Zhang and Roger Chen. Victor is a tax partner, Roger is a tax director, and they are both based in Deloitte, China. You may access our bios on the left side of the screen. Before we introduce the agenda for today's webcast, we'd like to take a moment to highlight some of the features of our webcast console. First, all users are on listen-only mode. If you have any content-related question, you can submit at any time in the Q&A box at the bottom right of the screen. We will do our best to respond to your questions during the presentation. Secondly, all PC users can maximize or minimize each box at your convenience during the webcast. You may also explore the icons at the bottom of the screen. If you want to download today's slides and related publications, please go to the Download and Links box. On the other hand, mobile device users can review the slides and answer the survey on screen. Also, if you require an attendance record for this event, you will receive an automated email with CPE certification after watching for 15 minutes. So for today's topic, the goods transaction between related parties within multinational groups has always been the focus of tax and customs authorities in various countries. The World Customs Organization, WCO, has explored the feasibility of using transfer pricing data for customs valuation purpose. WCO issued a guideline to customs valuation and transfer pricing in 2015 and 2018 respectively, with the aim to encourage collaborations and establish a link between the two authorities. However, in practice, there are still areas of improvement in multiple jurisdictions. In China, recently there is an encouraging development. 2 months ago, on 18th of May, the city of Shenzhen in the Guangdong province of mainland China announced a collaboration between Shenzhen's Customs and Tax Bureau on transfer pricing administration. The pilot program, which became effective upon announcement, allowed qualifying businesses in Shenzhen to have their transfer pricing arrangements for the importation of goods from related party agreed to by Shenzhen Customs and Tax authorities. On the basis of APA mechanism for tax purpose and advance ruling for custom purpose, the notice established a collaborative administration mechanism between tax and customs. This, as you can see, provides effective means for taxpayers to manage the transfer pricing risk of the import in the future. It will greatly increase the certainty and predictability on the application of tax law. As a matter of fact, other than Shenzhen, we have also noted that a very similar collaboration administration mechanism was also taken into consideration in other locations in China. Just to name a few, Jinan of Shandong Province, Suzhou of Jiangsu Province. The trend is that tax and customs in China are actively exploring the collaboration on this matter. In this context, in this debrief, we will mainly focus on China's transfer pricing management mechanism and the collaboration pilot. We will firstly share the observation of the trend for audit and investigation. We will then compare the existing available mechanism for a advanced ruling or APA. And next, we will introduce the collaboration mechanism and also illustrate it by two examples. Followed by a Q&A session, our webcast today will then come to an end. As a warm-up, I'd like to invite you all to answer our first polling question. The question is, has your company ever been investigated by customs or tax authorities on transfer pricing matter? There are 5 choices. Never, have been investigated by tax, have been investigated by customs, have been investigated by both authorities, and not applicable. While we are waiting for the result, I have a question for Victor. We all know that in China, tax authorities are now very service-oriented. In other words, the overall number of tax audits is not as much as before. From your observation, what kind of company is more easily be targeted by tax bureau for a transfer pricing audit?
Yeah, thank you, Dolly. And I like your term service-oriented a lot. And as you just mentioned, it's right that we do not see so many high-profile transfer pricing audits recently. But however, actually, China SDA could still audit taxpayers in different ways. They could either launch a formal transfer pricing audit, or they could encourage you to run some a voluntary adjustment. So there are still ways they can do the transfer pricing audit. And so in this regard, companies with significant intercompany service transaction, but at the same time, low profit margin or loss making, those could still be audit targets. And the last point you add, Dolly, would be if companies with significant intercompany service fee and royalties, those would be now the key transfer pricing audit target. Thank you. Back to you, Dolly.
Thank you. Let's view the result. Yeah, surprisingly, I think 33% of our audience has never been investigated by customs or tax. Lucky you. And around 40% in total has been investigated by either or all the authorities. And the remaining are not no or not applicable. Yeah. So with this, I think this leads to us to the first topic, observation of the audit trends. Now I'll give the floor to Victor and Roger for introduction. Victor, would you like to start first with tax?
Yeah, for sure. Thank you, Dolly. And transfer pricing audit or transfer pricing management is nothing new in mainland China. China STA has already set up a national team specializing in the anti-tax avoidance. And also in some key cities, they have also set up the local transfer pricing audit teams. That is to say, our taxpayers, if you have any transfer pricing dispute, we are actually dealing with the experts from the China STA about transfer pricing. And after accumulating so many years of experience in audit, China STA, I would say they are kind of certain experts in some industries, because understandably, if you audit an industry many times, you already know how that the business of that industry, like pharmaceutical or automobile. And secondarily, we would say China STA now is using big data and using their analytical tool to classify the risk level of these different taxpayers, so that they could adopt a so-called risk-based management approach. They would define which taxpayers are high-risk payer and who are low-risk taxpayers. So the treatment for the low-risk taxpayer would be, if they consider you well compliant with the local regulation, they are more welcome to give you more certainty, open to discuss an advanced pricing arrangement with you. But if unfortunately you are considered as a high-risk taxpayer, then more likely than not you will be on the TP audit list. Lastly, the China Tax Authority is also running some so-called innovation in terms of how they analyze the transfer pricing matters. 10 years ago, I guess a transfer pricing audit was more like negotiating what would be the profit margin the taxpayer should keep in China based on a set of comparable search. But nowadays, instead of just telling the tax officer, okay, I keep 5% in China, I think 5% is healthy, China Tax Authority is more keen to understand your global value chain, to understand how much profit you get globally, and whether you keep a fair share of profit in China. With that, I would pass over to Roger to share how Customs Authority will still provide and manage the matters.
Okay, thank you, Victor. So in terms of the trend of customs transfer pricing review, I think it's quite similar with the tax authority now. So from the vertical dimension, the General Administration of Customs (GAC) will centrally guide all China customs bureaus at the national level. And there are three Customs Tax Collection Administrative Bureau, TCAB, established in Beijing, Tianjin, Shanghai, and Guangzhou. These TCABs, they are mainly working as national bureaus to issue the orders or instructions directly to local customs on TP-related matters based on different industry and maybe based on different products. And from the horizontal dimension, since a lot of custom departments, they can issue audit notice to on TP issues. So maybe, for example, a tariff department or maybe an audit department, they can also issue the notice. So GAC has also realized a cooperation mechanism so that all these departments, they can work together for one case. And maybe for a group with many subsidiaries in China, GAC can also coordinate different regional customs to have a jointly audit on TP issues. So the audit conclusion for one entity could also be as a reference for other audits in other regions. So that's the general trend. Back to you, Dolly.
Thank you, Roger and Victor. From your introduction, it seems that both tax and customs authority have their own established mechanism to carry out the audit. Such audit, I understand that most of them are retrospectively. This will lead to certain type of risk for the taxpayers. In view of that, I think an approach to minimize the audit risk is to obtain some type of pre-approval on the transfer pricing matter from the competent authorities in advance. So next, we will ask Victor and Roger to introduce whether there's any advanced ruling mechanism available in China for TP and customs. Victor, would you like to start first?
Yeah, sure, Dolly. As we often say that transfer pricing is not an exact science, and in particular, different stakeholders may have different views on the same transaction, on the same pricing. So that's why Dolly mentioned it's a highly controversial area. As a result, there is a mechanism the taxpayer could consider. We call it advanced pricing arrangement, or APA in short. The key concept is that instead of we just sit there, wait for the custom and wait for the tax officers to come to audit us, we could proactively negotiate with the local tax authority to let them know our key intercompany transactions and our policy. The most important thing would be have an agreement on how much profit to be taxed locally. In particular, if you have cross-border intercompany transactions, you could also apply for a so-called bilateral advanced pricing arrangement, so that different tax authorities could negotiate in advance about the arrangement. The threshold of such a program is not very high from a tax perspective. Like if you have intercompany transaction annual amount like RMB 40 million, you could already apply for it. But however, historically, negotiating an APA, no matter you negotiate a unilateral one or a bilateral one, it often took a very long time, since the tax officers would be very cautious if they agree with you on something in the next 5 years. In this regard, 1 year ago, China STA initiated a new pilot program. We call it a simplified unilateral APA process for the purpose to reduce the timeline of this APA negotiation. With that, I would invite Roger to comment the customs advance ruling. Thank you.
Yeah, thanks, Victor. So China Customs formally carry out advanced ruling mechanism from 2018. Actually, it was a commitment from China central government to join WTO trade facilitation treaty in 2015. So enterprises could apply advanced ruling on classification, on customs valuation or origin of country and other duty-related elements. And advanced ruling on customs value, that means that an enterprise may apply to customs for an ruling on the relevant elements or valuation methods of the dutiable value of the import goods before the goods are actually imported. Through the ruling, the enterprises can obtain the predetermination of import pricing from the customs level, improve the certainty of operation and management, and effectively reduce the risk of import price compliance management. And the process for the ruling usually includes 3 phases. The first one is application. The enterprises should submit the relevant documents to customs. So maybe take the TP as an example. The relevant documents including audit reports, transfer pricing policies, transfer pricing local files, exactly. And then customs will have initial review. If the documents are completed, customs will issue a notice that they accept this application. And the third phase is the negotiation and the final conclusion. Once the final conclusion was made, customs will issue a written decision back to the applicant, and the applicant can further declare its import price based on the conclusion in the notice. So that's the general procedure for advanced ruling. Okay, back to you, Victor.
Okay. Then from time to time, we hear questions from our clients asking, okay, whether applying for an APA is good or not, because normally going for an APA would be a very big tax decision. And once you submit the information, you disclose the information, the tax authority have the right to better understand and request the information from you. So let's look at a few statistics to better understand the China advanced pricing arrangement landscape for now. From 2005 to 2020, in total, based on the publication of China STA, there are around over 200 APA cases concluded. At a glance, 200 seems a good number, but if we really divide that 200 with 15 or 16 years, on average, each year only 10 to 20 taxpayers could really conclude an APA. So in the past, there are a lot of APA applications still in the pipeline, and from taxpayer perspective, things are quite difficult for them to efficiently conclude the APA, but instead they need to spend quite some time and effort, but still uncertain when they could conclude or whether they could conclude this case. And therefore, we expect the China Tax Authority, after promoting the new simplified unilateral APA regime, we expect there will be more resource committed from the tax authority, and that the APA application could be speeded up. And also, so far, the China APAs mainly cover manufacturing transactions, and also covering the majority would be related to tangible asset transactions. China STA is actually very keen to understand more about different industries. So if you have a relatively new business model, then maybe they would be more interested to negotiate the APA with you. With that, if we want to really be successful on a China APA negotiation or application, then we probably need to know very well the local work protocol. We need to know the mindset of the China tax officers and what would be their focus point, what they like to review. And with that, we could have more effective communication with them to move the case forward. And if we could move to the next slide. And well, I would say advanced pricing arrangement, of course, with pros and cons. I would not encourage all taxpayers to apply for the APA because it requires a resource, time, and commitment. But however, if you have significant intercompany transaction, in particular, you have the potential challenge of being double taxation, then APA is still a very effective tool for you to manage. And as mentioned by Dolly at the very beginning, if you just wait for a TP audit, then it thinks it's more like a passive approach. But if you want to proactive manage the certainty, then EPA is still a powerful tool, in particular for those with significant transactions and with complex arrangements. So with that, Roger, maybe you could also go into a bit detail about the customs ruling. Thank you.
Yeah, thank you, Victor. Since the advanced ruling is since the valuation is very complicated area, and it is very easily to have dispute between the applicant and the customs authorities. So there are different items related to relevant factors of dutiable value, TP, and valuation methods can be applied by the applicant to China Customs for advanced ruling. Totally, they will have 15 items we can apply to have ruling from China Customs. And for the goods side, there are no restriction on the applicable goods. And for each advanced ruling, it will be applied to all national customs, and it will be valid for at least it will be valid for 3 years. And for the related party transaction, generally speaking, we understand there are 3 scenarios that the ruling might be helpful for our companies. The first one is maybe the transfer pricing policy adjustment. We understand due to some like macro environment changes or maybe some changes on our company's internal structure, or maybe trade process changes. In some cases, our company will adjust our transfer pricing policy, and accordingly, our import price will be changed as well. So if the percentage of import price adjustment is too large, let's say maybe more than 10%, since China Customs, they have a big data, they have a database to monitor the import price. It is very easily for customs to identify such changes. So an advanced ruling for such kind of changer of the policy would be helpful to have agreement before the goods has been imported into China. That's the first one. That's the first scenario. And the second one is the royalty payment. All the importer is required to disclosure if there is any dutiable royalty payment when declaration in China practice. And any untruthful declaration for this point may result in additional import duties, late payment surcharges, or even penalties. So since the royalty is also a very technical, there's some technical nature. Whether a royalty should be dutiable or not is a technical issue. So we still you can use the ruling mechanism to have agreement before before the payment of the royalty. And the last one is some out of price charges like commissions, design fees, or software fees. That's also dutiable from customs valuation perspective. So a ruling it's a best solution to mitigate the potential risks based on our observation. Okay, Dolly.
Thank you, Roger and Victor, for the sharing. From what you have shared, we can understand that there are some differences between the two authorities when they carry out the investigation, also in the advanced ruling themselves. For taxpayers, this would definitely increase the technical difficulties in aligning with the authority that to have a transfer pricing that is acceptable to both customs and tax. Often, taxpayers may find themselves stuck in the middle due to the lack of alignment between the two major fiscal revenue collection authorities on the same matter, i.e., the transfer pricing. Before we move to the next part, let's have our second polling question. The question is, will your company consider a advanced pricing review mechanism, such as the APA for tax or advanced ruling for customs valuation, or the newly introduced collaborative administration in the future? There are four choices. Consider about the APA, consider about the customs advanced ruling, consider about the collaboration administration with both authority, and none of the above. While you're taking your time for polling, I have a question for Roger. So what kind of analysis customs will generally adopt for their review on related party importation?
Okay, that's a very good question. From our observation for TP review or TP audit from customs, China customs, they usually firstly focus on the company's transfer pricing policy itself. But unlike tax authority, customs may ask for more detailed information about how the import price of each item is determined based on this policy. So that's the first thing. And secondly, on the basis that the company has a transfer pricing policy, the customs will also pay further review that the rationality of the TP policy and whether there's any supporting materials like benchmark study to support the rationality of the TP. And finally, during the implementation of the TP, customers will also pay much attention on whether there are any deviations or gaps between the policy and its implementation. So that's how China customs review the TP in practice. Dolly.
Thank you, Roger. Let's take a look at the result. Um, so I think the result is as expected. Overall speaking, more than 50% of our audience would like to have an advanced alignment. So most of you would like to consider the APA with Tax Bureau, and also around 20% wanted to consider a collaborative administration, while there are around 40% of the audience are none of the above are considered. I think this will give us a very good overview, and I think everyone will be interested to take a look on how the pilot collaborative working mechanism in Shenzhen will take place, and how this mechanism may help the taxpayer to manage DTP risk. First, I will invite Victor to provide an overview on the Shenzhen pilot.
Yeah, for sure, Dolly. I think you just described the common dilemma for taxpayers with like an intercompany import transaction. That is, if you have a China company import from overseas related parties, on the one hand, the custom authority have the concern whether you declare your import price too low, so that you intentionally reduce your custom duty. But on the other hand, the tax authority, they are concerned whether you set your import price too high, so that you intentionally shift the profit from China to overseas. So the taxpayer would end up in the middle of nowhere. And in practice, we also see the cases whereby the taxpayer concluded some discussion or negotiation with one authority, but the result may not be automatically accepted by the other authority, so that the taxpayer are kind of in a difficult situation. So our sharing today about this collaborative administration regime in Shenzhen as a pilot program is really a good news for those taxpayers in such dilemma. Because instead of you negotiate separately with two authorities, this regime would allow our taxpayer to file the application of advance ruling to both customs and tax authority at the same time. So that three parties could actually sit at the table to discuss the same matter. And because both the custom authority and tax authority are involved in the discussion, so it's more likely, comparing to the prior separate negotiation, it's more likely under this collaborative regime, both authorities could reach a consensus with the taxpayer. I would like to highlight a few key items here. The first one is the city, Shenzhen, because this formal notice is only applicable for now for Shenzhen taxpayers. Although Dolly already mentioned at the beginning, there are some other local cities. The other local cities, they are also considering similar mechanisms. So even taxpayers not in Shenzhen may still consider this new regime and be aware of this kind of collaboration regime. And the second thing I would mention is because it's a negotiation with both customs and tax authority. As a result, by the outcome of such negotiation, it would be a consensus memo with three parties: the taxpayer, tax authority, and custom authority. The memo would also document certain key information, such as how you set up the transfer pricing. And if we successfully concluded this negotiation, then both tax authority and custom authority will respect such arrangement. And lastly, this mechanism could be effective for the next 3 years. Not a very long period, but considering this is a pilot program, understandably, the authorities would allow the effective period in 3 years, not very long enough in a pilot program. So with that, I guess there are also some details we need to look at. So I would invite Roger to go into a bit more detail about such application.
Okay, sure, Victor. So let's take a look at the process from the application to implementation of the final memorandum. The whole process, there are many possible outcomes, maybe including unaccepted application due to the incomplete information, or maybe the suspension due to the lack of consensus during the negotiation among three parties, or maybe the termination or modification of the memorandum due to the uncompliance during the implementation process. So there are different outcomes, but we are hoping we can achieve a good result for this application. And we will highlight 2 points in this whole process. The first point is this is a joint assessment and negotiation. After the application is accepted, Shenzhen Customs and the Tax Bureau will initiate a joint assessment and negotiate with the enterprise on TP policy and the calculation methods for TP of the related import goods. And in this process, the enterprise, customs, and tax authority have the opportunity to carry out the technical review exchanges. So that's a new, very new mechanism in China. And the second point is there will be a closely follow up and there are flexible adjustment. The collaborative administration will impact the transaction price of related party import goods for the next 3 years, just like Victor mentioned. So the applicant should submit its annual report on the implementation of collaborative administration in hard copy and soft copy to both authorities within 6 months from the end of each year. That's the first thing we need to submit to the authority after the memorandum has been signed. And while there is any substantive change which may cease the memorandum, the applicant should report in a hard copy to both authorities within 13 days from the date of changes. The two authorities will negotiate to revise or maybe terminate the memorandum in accordance with relevant regulations. And on the other hand, the enterprise also has the right to propose to review or terminate, to revise or terminate the collaborative administration during the implementation process. Next page, please. Yeah. So in this page, on the left hand, that presents the structure of the memorandum, and on the right hand side is some key concepts of collaborative administration. The first one is the first concept is the collaborative price. The collaborative price refers to the price or cost of import goods calculated according to the reviewed TP policy, and the calculation methods are agreed by both the customs and the tax authorities. That's the first one, and the second one is the key assumptions. The text of the memorandum is determined in accordance with the APA related terms. For factors such as internal and external business environment that may have a significant impact on the implementation of the collaborative price, key consumptions are agreed upon and the enterprises should hand in a hard copy report to Customs and the Tax Bureau within 13 days, just like I mentioned. And the amendment or termination of the memorandum should be negotiated accordingly. And the last one is the price adjustment. It also clarified adopting calculation method in the memorandum, including transfer pricing and customs valuation methods for taxation and valuation purpose, as well as financial indicators and how to judge what's the price is fairness in the memorandum. So that's some key concepts in this memorandum. Dolly.
Thank you, Roger. Seems a lot of documents to be filed. But I believe that for those enterprises who are constantly challenged by tax or customs authorities, this pilot program in Shenzhen offer a possible solution to find a balance point with the two authorities. So how the collaborative pilot might help? I have we have prepared two case study. So I will introduce them one by one and introduce and invite the two gentlemen to comment how it may apply. The first case study is about a foreign invested company involved in the trade business of consumer products. In particular, the company imports goods from related parties into China for distribution to third-party customers. The company had applied with Tax Bureau for a APA to review its future reasonable profit at a net profit level method. During the process of the APA application, consider most of its goods are imported. The company also took the initiative to contact the customs authority to apply for an advance ruling on import price by aligning a gross margin in China distribution business. For this case, Victor, would you like to share your comments on this case?
Yeah, thank you, Dolly. So it seems to me like this company is quite lucky because first of all, it could conclude the net profit margin with the tax authority. And then separately, it seems like they could also have alignment with the customs authority regarding the gross margin. In practice, based on our experience, we may not be so lucky every time because even both authorities would use certain analysis approach. They would use even use the same database to look for like comparable companies. Not necessarily both authorities would come to the same set of comparables. And even we agree the net profit margin with the tax authority, is not necessarily we could come to a gross margin that the custom authority would be 100% happy with. So Dolly, that's why I say in this case, the taxpayer seems quite lucky. But this also highlight our topic today. If we think it this way, if the taxpayer, they could file the application under this collaborative regime at the same time with the custom authority and the tax authority. Then in this case, they could less rely on being lucky, but could get the consensus with both authorities at one time. Back to you, Dolly.
Thank you, Victor. Yeah, this is a takeaway that company take proactive approach, are always prepared and be in a better position to negotiate. But you may ask, like, it's a trading company, relevantly straightforward. What if it's a manufacturing company? Is it possible to apply for a ruling? So let's take a look at the second case. The second case is also a foreign invested company. It is a manufacturing entity. In particular, it imports raw materials from related party and produce in China. After production, it will sell the finished goods to China unrelated customers. The tax authority and customs, they have separately carry out audit on TP. However, the review result of the two authorities making the company quite confused. The tax authority believe that the transfer pricing does not conform to the arm's length principle. The local manufacturing entity should reduce the cost of imported goods and increase local profitability. And in the end, the tax authority asking the taxpayer to pay more corporate income tax. While the customs hold the opinion that the import price has been affected by the special relationship between the buyer and the seller, and the import price is not sufficient enough. And therefore, the customs, they are asking the manufacturing entity to pay more import duty and VAT on historical importation. The company communicated both authorities, but each authorities they are quite stick to their own rule and interpretation, and they will not change their conclusion. In the end, the company accepted the different requirement and pay the tax to the two authorities respectively. So compare with the first case study. In this case, it indeed reflecting some frustration from the taxpayer. So Roger, would you like to analyze the case and share your observations?
Sure, and agree with you. It's not a good result. Technically, the cost plus method for TP is similar to the calculated price method in customs valuation. They both adopt the cost plus approach to calculate the price of the product. However, in practice, China customs, I don't think they prefer this method because they don't want to rely on the data from overseas. So usually they still will focus on the profit left in China. But we understand that this is a manufacturing company. So even the margin of this company is high. Um, it is maybe it is because the import price is low, but maybe sometimes it is also influenced by the value added process in China. So the negotiation with customs for a manufacturing company usually will be difficult than a trading company. For this case, I understand that the client face the same challenge but different results from tax authority and the customs bureau and met the double taxation finally. So if the joint review mechanism or collaborative administration is workable, it might be helpful to invite these three parties to sit down together to have a fully understand of each other and have an alignment to determine what's the reasonable price for the import goods should be. So that's my comments. Dolly, are you there?
Okay, thank you, Roger. So it seems like a manufacturer with import from overseas may face more the challenge than the first case, the trading company. So with that, I think, Roger, you will agree that the pilot mechanism in Shenzhen is a good idea. But in practice, there could be, I believe there could be still some questions that our audience, the taxpayers may need to think about. Such as when considering a new TP policy, how to balance the potential impact from both the tax and custom authority, and at the group level, is it possible to reach the agreement with both authorities, but still following the group's transfer pricing policy? And then in practice, I guess people would be very interested in to see how both authorities, like if the tax authority raise a tax audit, whether the custom authority, they would be willing to follow the tax authorities' comment. So, Roger, I think the Shenzhen pilot program is, of course, a good start, but in practice, there may also be action to clarification points we need to watch. So, Roger, to see if anything you want to add, but before we pass it back to Dolly.
Yeah, we can move to next page. Oh yeah, this page for. I have some suggestion to our clients today because due to the we only have 2 minutes before we go to the Q&A session. So I will just very quickly introduce my suggestion. The first is we should to have a fully assessment before we move forward, because not all the companies can apply this new pilot program. Just like Victor mentioned, only so far is only for those company registered in Shenzhen. Maybe in the future there are a lot of different regions will have different pilots, but currently only in Shenzhen, and we still need to understand the potential impact in advance. That's the first suggestion. And second one is we should be prepared before formal application. A large number of documents need to be disclosed to these two major authorities. Once we decided to move on, this information we should internally have a review and decide which kind of information can be disclosed. And all the information disclosed to authorities should be aligned and correct. The last one is we need to make a long-term planning based that the final conclusion for this collaborative mechanism will be effective for 3 years. So we don't suggest to easily change our TP policy during these 3 years. We need to have a long-term focus rather than a short-term planning. So that's the general situation for the application. Back to you, Dolly.
Thank you, Roger. Okay, so with that, I think we've covered off the presentation, and we do receive a couple of questions from the audience. So we will take the time for the Q&A. So the first question I think is for Victor. So it's a TP question. So the question is how long, like the number of years, can a taxpayer have an APA effective to an entity? And whether there's any provision for rolling back of the APA for earlier years.
Hey, thank you, Dolly, and thank you for the question. The regulation was set the effective period of transfer pricing APA within 3 to 5 years. And in practice, normally taxpayer would request for 5 years. And reason being, you go for an APA, you already commit quite some resource to this application. Therefore, taxpayers normally, if could successfully conclude this, normally they hope to have the period as long as possible. And even after the 5-year period, many taxpayers would still like to renew to enjoy the benefit of such certainty. And then the second part of the question, Dolly, I think it refers to the so-called rollback period. That is, I would say the rule makes it clear that the tax authority and taxpayer could roll back to the previous years. And in practice, it's not just could. I would say more likely it would be a should. Because tax authorities, they could not just agree with you, we only look at the future but ignore the past. But more likely they would say, okay, let's look at what was happening, your current situation, then we enter into the new period discussion. So Dolly, to answer the second part of the question, more likely, no matter the taxpayer like it or not, more likely the APA would require the rollback to the previous years. Thank you.
Thank you, Victor. So given that the APA will rolling back to the historical year, I think one recommendation to the taxpayer is a full assessment, both on the future and on the past are necessary in order to making a decision of application. Okay.
Great, thank you.
Yeah. Okay, there's another very good question, and I will asking Roger for that. So the question is about is from a company who is a distributor. So the company is saying that the pricing policy is based on the targeted local profitability and to back calculated the input price for transfer pricing purpose. However, due to various reasons, the forecast could not always be very precise, and it's inevitable that during the one calendar year, there could be some deviations. In overseas, it's quite often that the company can apply for a retrospective TP adjustment at the year end. However, in China, it's very difficult to have that type of adjustment due to the foreign exchange control. So the question to you, Roger, will be if we are to apply for a collaborative management mechanism, is it possible to help us achieve the year-end TP adjustment?
Okay, just like this audience mentioned, this is quite common practice in other countries, but may not be workable in China. In fact, the China's foreign exchange management bureau and the customs and the tax authority have different opinions on different positions towards the we call year-end TP adjustment. But there are some pilot programs that allow the enterprises to collect TPA through a specific account in the bank, maybe to pay the external profit to overseas by customs declaration. There are some pilot programs in different regions of different in China. But we don't see a formal regulation in China so far. So that's the that's the background of the TPA. And back to the question whether the collaborative administration could be helpful for the TPA implementation. There is no clear answer I have now because in the regulation there is no item mentioned about this point. However, just referring to the practice of BAPA, in fact, in case of similar profit deviation, maybe one tax authority can allow the enterprise to adjust their profit through the specific channel. Therefore, considering the situation, I believe if enterprises have similar asks to the tax bureau or customs authority, we can take an initiative to clarify it to government authorities at the beginning of the negotiation and try to seek support from those authorities to strive for an easy model for the future day-to-day operation. So that's my general answer for this question. Dolly.
Thank you, Roger. I think we still have time for one last question. So the question, I will invite Victor to answer. The question is, we've talked about a distribution company, a manufacturing company. Does a transfer pricing also apply on any service company who is providing product pre-production advice to the headquarters? I think it's more like a TP question. So for Victor to answer.
Yeah, right, Dolly, thank you. And a quick answer is yes, because the intercompany transactions will cover different types, no matter buy, sell, or service. Of course, if your company is only engaged in a service, intercompany service transaction, it's more like a tax transfer pricing concern. But on the other hand, if your company have intercompany service transaction, but at the same time, you also have like import from overseas, then based on my limited knowledge, I think Roger and Dolly, in those cases, the taxpayer should still need to consider whether any impact on the import price from a custom authority perspective. So Dolly, I guess it would depend on whether it's solely a service company or is it a related party import, but with other intercompany transactions, to see if anything, Dolly, you'd like to add.
Yes, indeed, Victor. I think depending on the nature of this service, the customs they will also examine whether it will be viewed as related to the imported goods. But the taxpayer can always also asking for clarification through advance ruling. Okay, I think that is all we have time for the Q&A. Thank you to all who are able to join us. We would like to encourage you to fill out the short survey that will pop out on your screen momentarily and tell us what you think about today's program. And if you join us late, please know that this presentation will be archived for future reviewing. If you feel that others would benefit from this webcast, please share the webcaster via the share this icon and have them visit the debrief website. And of course, we will respond to all the questions submitted during the webcast in a couple of weeks. And also, if you think of any other question or comments later, feel free to reach out to me or our speakers. We will be more than happy to talk to you. And lastly, please do not forget to tune into our next scheduled webcast from the Indirect Tax series on the second day of August 2020. So the title is Tackling the EU CBAM Impact to Structure Sustainable Supply Chain. Lastly, from all of us at Deloitte, thank you for your participation in Deloitte Asia Pacific Tax webcast today. Thank you and goodbye.
Thank you.